In today's stock review, we're talking about a Canadian integrated energy company, Suncor, which mostly focuses on oil, which is nice because by reviewing this stock, I kind of get insight into the oil industry as a whole, because as a commodity business, a lot of these companies tend to trade in a similar fashion based on the overall economy, as well as the strength of the energy sector. Quick shout out to my patrons, as this was a monthly pick for me to review. In this video, we're going to be going over the profile of the company as well as what I think it should be valued at. It recently had an earnings report that came out, which gives us nice insight into a fresh look at income statement, balance sheet, cash flow, as well as guidance going forward. Based on what I looked up, Suncor looks to be a major player when it comes to the energy market. The company actually went as far to change their name to Suncor Energy a few years back. That way they can say that they're more than just an oil company. The reason I mention that is because according to their 6 strategic long-term objectives, they're supposed to be net zero emissions by 2050. They're trying to expand low emissions business, as well as basically achieve world-class ESG performance. There is a focus in the objectives to be more friendly to the environment and really think long-term on how they may need to transition, because with a lot of these oil companies that I look at, the long-term addressable market eventually will plateau and the transition to more renewable sources of energy will take place. What's fun about the Suncor ticker symbol is there's actually 2 ticker symbols. There's one for the Canadian exchange as well as the US exchange. That is important to remember throughout this video. I'll reference whether I'm looking at the Canadian ticker symbol or the American one. The one trading on the New York Stock Exchange goes by SU. The market cap of the company in US currency is $39.621 billion. So a large cap company. You can see that it boasts a very high yield, and that actually does come up in the earnings report that recently came out. Overall, this company is a cyclical company based in the oil industry, so there's going to be ups and downs based on how the economy is doing. SU.TO is the Toronto equivalent. You can see it's trading at $33, and this is because of the exchange rate. With Canadian dollars, the market cap is $49 billion here. If you look at the financials, I actually did the valuation later on in Canadian dollars because I wanted to avoid the whole exchange rate issue. When I came up with my valuation target or fair value, I'm talking about Canadian currency and the Canadian stock price, not the US SU ticker symbol. Taking a look at the year-to-date performance of this company, we'll see that there's a high correlation between the stock price here and the price of crude oil. You can see that they're both trending up. Oil in general, as well as a lot of the stocks in that sector, have performed pretty well this year because of this increase in their base commodity. With the pricing elevated, it's important for management to take advantage and either fortify the balance sheet or expand in a strategic way, because we've seen what happens to oil related companies when we go through a price correction when it comes to crude oil, aka the pandemic. We briefly talked about the macro environment with oil in the long term going to the wayside as demand for it plateaus at some point. And this is based from one of the biggest players in the market itself, OPEC. If you haven't heard of that term, it's essentially a group of countries that come together to actually agree on production of oil coming out of those countries. They have some of the world's largest oil reserves. If OPEC talks about oil and what they're doing, it can move the market drastically because they account for around 41% of the total world crude oil production, which is a massive number. And that's one thing that kind of sucks with investing in oil companies, is you're kind of at the mercy of OPEC and whether they decide to either flood the market with production to either screw with their competitors, or if they're going to play nice and try to allow all oil companies to make a reasonable profit depending on the pricing. Also, according to the market analysis and insights coming out of the 360researchreports.com, the global crude oil market is supposed to only be growing at a compounded annual growth rate of around 2.3% through 2026. Also worth noting is, according to a different agency, the International Energy Agency, oil demand is supposed to peak by 2025. Meanwhile, OPEC believes that the demand will plateau around 2035, so a little bit later. But the point I'm trying to drive home is that eventually the demand for oil will start to slow down to a point where it actually starts to shrink, and that's extremely important when we're investing in these oil companies and thinking 20, 30 years down the road. When it comes to my own opinion and investing style. When it comes to cyclicals like oil, steel, I have these plays in my portfolio, but I don't hold these forever. These aren't forever stocks that I just blindly hold on to because of my opinion that they do go through these boom and bust cycles. I don't really want to hold a large of allocation towards these types of companies during a bust cycle. Now, in my viewpoint, commodities are going to do well through the first half of 2022, trickling off this year's good pricing, and the earnings should start to roll into these companies. The PE ratios are going to get stronger. Overall, these companies are generating a lot of cash flow, which is great. But the downside is that eventually pricing will probably correct with increasing capacity across all of these cyclical industries, as well as if there's an economy slowdown. And it's good to look at the business cycle as well to see kind of where we're at. And I'm getting this from Fidelity, who tries to say what business cycle they think the economy's in. And for Canada, they're more in the recovery, going into expansion mode, which is decent for energy. According to historical performance by sector during a certain business cycle, energy performs the best when it comes to the late period of the cycle before we go into contraction. Now, if this chart is true, I would say investing in oil before the late period would be the most beneficial. But getting in a little earlier probably doesn't hurt that much if you believe in investing in companies based on the business cycle. Let's go ahead and dive into the financials. And what's nice about evaluating this company is that the earnings just came out, so the financial statements are hot off the press. Overall, when it comes to earnings per share and revenue, they miss slightly compared to consensus, but when you compare to the previous year, they're absolutely crushing it, which makes sense with the boom in oil. Other highlights include the fact that the company is throwing a ton of money back at buying shares as well as increasing the dividend. Also, they're lowering their debt. They are taking the good times in the oil industry and they are going ahead and fortifying their balance sheet, returning value back to shareholders in the form of this increased dividend. As I mentioned earlier in the video, that dividend percentage is pretty high, and this would be one reason to invest in this company. If you're looking for income, this company does have a higher dividend percentage for now. What I thought was a little funny while reading through their quarterly report is that they had those 6 objectives related to transforming the company, becoming more environmentally friendly. Reading through the earnings report, there wasn't really too much detail on that side of the business. It was mostly focused on their current operations around oil production and downstream products. The company also gave separate guidance that we use in a discounted cash flow assumption, and that's the total production of the different products that they make, as well as the CapEx spend that they plan on spending for the rest of 2021. And then we also have the costs related to actually creating these different products. Using all of that information to the best of my ability. Now, I'm not some expert when it comes to the oil industry. When it comes to manufacturing, I have a little better understanding of something like the steel industry. I also got a little help from Finbox to come up with the projected revenue based on this information up here. I came up with a projected fair value of around $39.41. If you want to see the full assumptions, if you join the Patreon, there's a download of that discounted cash flow model to see all of the assumptions that went into this. That being said, the upside based on the current value when I did this was around 26%. It's currently trading around $33, and the technicals that I saw when I was doing this analysis is that the strength of the earnings coming out, I thought breaking through that all-time high previously in May was going to be pretty strong. It was going to get some carry through with a little bit of momentum because the earnings were definitely taken from a positive viewpoint. The biggest risk I see to this company is if oil pricing collapses. That would obviously hurt the company's profitability as well as the future revenue. As for opportunities, I still think transitioning to what they basically said in their long-term strategy to renewables or lower emissions will be a positive for the company. For any oil company out there, it's a ticking time bomb before the world starts to shift to different sources of energy. For the Patreon portfolio, I'm not buying this stock. I already have my own personal exposure to oil through ETF VDE, which is a oil or energy specific ETF through Vanguard, and that is how I have exposure to the cyclicality of the oil industry as a whole. If you guys did enjoy this video, make sure to hit that like button as well as consider subscribing to Mainstream Wolf, where we talk investing, stocks, anything to do with money. Thanks guys for watching and have a great day.